guys, 5 ways you can reduce your tax. Hello everyone, it is Nick from Aussie Money Man. I'm back again, and in this video we're here to talk about taxes. The thing that no one wants to talk about, but the thing that everyone needs to talk about. Alright guys, so I'm going to start with the more simple ones first, then we'll get into the more complicated ones. So I will go into things like trusts and so forth, and they're a little bit more complicated, but definitely worthwhile for certain people. So first one is salary sacrificing. So salary sacrificing can apply to multiple things. You guys probably would have heard of super, so salary sacrificing into your super. But this also applies to almost anything that your employer allows. So pretty much what you do when you're salary sacrificing, you're paying with what the ATO calls your concessional salary sacrifice. So that's your pre-tax income. So non-concessional is post-tax and pre-tax is known as concessional. So pretty much what happens is you will pay for things, for example, like your car or phone, if your employer lets you, with your pre-tax income, and you save money basically. So if you understand the fundamentals of tax, which I'll quickly run through because there's a big misunderstanding here, and I'll admit when I was a kid I didn't understand this. With the tax brackets that are in Australia, I'll put them here hopefully, I'll be somewhere. It's not that when you just get over that line of income right between a tax bracket, so I think it's like 18 grand, 37 or 38 grand, and your whole income's taxed at that next rate. So it's not like you start at, I think it's like 15 or 16% or whatever it is, or 17%, and then it just jumps and you start getting taxed at 25% or whatever the next number is. I think it's arbitrary. This is just an example. It's actually your first 18 grand you make, or whatever the bottom limit is taxed at the rate next to it, and you'll see the number there. And then the second rate, the second amount of money, so that from there, to the next bracket is taxed there, and if you get into the next bracket again, so it's taxed, in these kind of steps. So it's not that all your income's taxed as you go up. Because I've heard stories of people, saying, oh, I don't want to go for that promotion to put me up to the next tax bracket, and I'll actually end up with less income. And with that understanding of the tax system, that is true. You would end up with less income in some cases. However, that's not how it works. So it's a progressive tax system. So pretty much you want to make more money either way. So that's something that confuses a lot of people. And the reason why that's relevant here is basically when you're salary sacrificing, what happens is because the government wants you to put money into your super and wants you to, depending on the situation, utilize that, right? Because they don't want to have to pay for your retirement. They don't want to put you on the pension, right? So as an incentive, they're incentivizing putting money into super and using these advantages that are available pretty much, and they'll only tax you at 15% for the money that you put into your super, up to $25,000 a year for most people. Again, on link, because it is different for more elderly people. I think it's like over 65 or 70, something like that. It changes each year. But the point here is just look at the link and look at all the specifics of it, because it's something I've been doing even as a young person. So it's definitely makes a difference. So as I was saying, 15% up to 25 grand. So that means roughly, if you're making 35 grand or more, it's almost absolutely worth your time to go make the effort to salary sacrifice a certain amount of your money each week, because you'll actually end up with more money at the end of the year. So basically that money that you're putting into super is money that otherwise would have just went straight to taxes. Alright guys, so again, the second one is more simple. This one's probably more simple than the former. However, it's important, and a lot of people don't do this. A lot of people are just lazy with this type of thing, or they don't know. And I hope it's more the latter, because that's what I'm here to help with. I like to help people understand these things, so they don't work their asses off and not get the full advantages of what they deserve and what they should get. So it's pretty much just to claim everything that you're eligible for. So I'll list off some things that people aren't aware that they're eligible for, to give some examples of what I'm talking about. So buying your uniforms and washing them and maintaining them, that's all covered under tax. If you do a job where you have to do a lot of reading, the magazines and content relevant to that you might buy, or TV shows or subscriptions, that is something you can claim. Or union fees, the things you can claim. If you work out in the sun, you can claim glasses, like sunglasses. You can claim sunscreen. You can claim hats. All these sorts of things. And basically, it's a lot broader. And if you understand the basic concept, which is basically you can claim anything that you are using to make an income. So if that thing that you're using relates directly to making that income directly, you can claim that. So for example, when I'm investing in stocks and so forth, I can claim those brokerage fees and so forth, because that's me making an income, right? Same with side businesses and property and all that, but I'll get to that in the later points. So claim what you can. Look, and again, links down below. There's even a list where for specific occupations what you can claim. But the things I just rattled off then, they almost apply to everything. Obviously, if you don't work out in the sun, you can't claim the glasses and so forth. But majority of the times, you can claim everything. And if you use your phone for work, well, you can claim the phone cost, the data cost, cellular cost, so forth. So know what you can claim and don't be lazy. Claim it. If you have an accountant, that's great. Explain to them the situation and they'll do it for you. But for people like myself that like to kind of do it all themselves because they like to micromanage everything, well, check out their website. The ATO does help you there. It's all available. Just don't lie about it. Alright guys, so the third one is trusts. So you guys probably have heard a little bit about this, probably on the news or from someone that you know. So it's largely dependent on your situation. So I won't go into the details of it, and you really should see a professional if you actually are going to go forward and set it up, because depending on your situation, there's lots of different things, and you do need to actually go see a professional to get it set up, and it can be costly. So again, it really does depend on your situation. But if you are someone, you know, who's higher income earning, a trust is extremely beneficial. Like, I'm talking crazy amounts of savings, and I know people personally that use trusts. So basically you put money in there, so you have, you know, hundreds of thousands of dollars of savings or investments, and you put that all under the trust name, right? You put your assets or whatever it is, whatever's making money, into the trust name, and pretty much what that allows you to do is a thing called income splitting, and people have been doing it for a long time. And pretty much what that allows you to do is, obviously, as you make more money, you know, you kind of go up in the tax brackets until it gets to a certain point where you're being taxed at almost 50%, or plus the Medicare levy and so forth and surcharge. I think it would end up being about 50%. So that makes a big difference. So if you have, you know, a spouse or someone close to you, or really anyone who wants to strike up a deal with you, you can, and they have a lower marginal tax rate referring to the kind of base rate that you're being taxed at. So basically, the marginal rate is which tax box you fit into, and that rate is your marginal rate. So pretty much, you know, that rate that's kind of next to you, I'll put it up again, is what determines your tax rate. So that's your marginal rate. And if you have someone who's making less money, well, and you go, okay, well, they own 50% of the trust, so you have 2 people, but obviously as the trust gets big, you would have more and more people, and people do that, you know, family trust, and then it gets bigger and bigger. And basically what that allows you to do is just go, okay, cool, well, you know, that might half or quarter, or even if it's just an eighth of the amount of tax you're paying. Like, if you're paying even millions of dollars, right, or even hundreds of thousands of dollars, whatever it may be, you will save huge amounts on tax by what's known as income splitting. And just a fun fact for your knowledge, it actually used to be the case where you could put these trusts, or part of the ownership of the trust, in a kid's name. So obviously they had no income. So up until $18,000 or thereabouts, they didn't have to pay any tax on it. And, you know, they would, if they had 3 kids, well, they'd split it across all of them, and they'd basically pay almost no tax on a certain amount of that money, which is just the biggest tax dodge. And they've stopped people doing that now. They do have to be over 18, but, you know, you can still utilize that. That's still something that people are doing today. So if that does apply, go do that. Go speak to someone. Again, I'll put a link down below. Now guys, real quick, I'll just add, firstly, if you guys could smack a like on the video, that would be great. It helps the YouTube algorithm. I believe that's what it goes by. Helps me, you know, actually get some more views, help out more people like yourself. And if you could also subscribe, that'd be great too. So pretty much my last video I aimed for 100, and we got almost 140 as of today. So today is Thursday. So as of Thursday, we have just about 140 subscribers, which is awesome, given my goal is 100. So yeah, just subscribe if you're new, or if you haven't subscribed yet, and yeah, we'll keep up the great content. Oh, also, last side note, do check out the blog. I mean, that's kind of where this YouTube channel started from. So when the blog kind of blew up, I figured I'd start making videos too. I've always had a passion for it. Yeah, so the other thing you can do is property, real estate. You know, the Australian dream right there. So pretty much everyone knows that real estate can be a great tax dodge, but a lot of people forget about one of the biggest parts of how you actually dodge tax with property, and that is depreciation. So when you buy a new property, I think it changes again, so I won't say specifics, but it's about 7 years. You can claim depreciation, you know, of just the house in general, right, because it's deteriorating, right, and the government gives you figures on that, and it deteriorating, you can claim all that, and that can make a huge difference on how much tax you're paying. Again, I will put a link down below for more information, but also I'll put a link down to a guy, his name's Damien. I've learned a lot from him, so I actually read a lot of his blogs and stuff to learn about this type of thing. So if you guys want to check him out, he's great. He's got a lot of good insight. Alright guys, and the final one is to start a business. Now, there's so many reasons why this is more advantageous. So when it comes to the tax system, at least in Australia, the least advantageous position to be in is to be an employee, unfortunately. So pretty much the tax benefits seem to get better as you move further and further away from the position of an employee. So the first example I could give is when you're a business owner, you can pay tax at the end of the year. You know, the government doesn't hold it for you, and and meaning you can't accrue interest on that. So if you're somebody who's paying a lot in tax, you know, at the very least you would want to keep that money at least in a high interest savings account or in some sort of investment, assuming you had faith in that investment, but at least in a high interest savings account so you can accrue interest on that money. However, you can't do that when you're an employee. And the other thing, like I should mention, I suppose this is not so much relevant to tax, but just starting a side business in general is something that's, you know, it's going to help. Obviously, we're here about finances. It's going to help in general. It will set up another source of income. So if that's something, you know, you've been wanting to do, and I know it is for a lot of people, well then it also helps with your tax, by the way. That's great in a lot of ways, and I'll explain exactly why right now. So the instant asset write-off was actually extended last year to the 30th of June this year, so 30th of June 2019. And pretty much that's up to 20 grand that you spend on assets in your company that just tax write-off straight away. You know, there's so many benefits that are given to companies and just businesses in general that aren't available to employees. So I just like to make that really clear when it comes to the tax system. The employees get stuff. Yeah, so pretty much what that allows you to do with this tax write-off is pretty much, it means, you know, it's up to 20 grand. So you spend, you know, 15 grand. That amount that you spend on that is decreased from your taxable income. So you spend 20 grand, 20 grand is removed from your taxable income. So you can imagine the tax savings that would be had there. The other thing is, well, if you're working from home, you know, like this is what I'm doing at the moment. I can claim everything, so, you know, stationery, my computer depreciation costs, my microphone, everything that I'm using right now, even my phone and so forth for calls and stuff and business and all that. That's all taxable because I'm using it for business purposes. As I said earlier in the video, I'm using it to make an income. So all of that's taxable. So, you know, you to think how much of a difference that will make, which again comes back to point 2, which is to claim things. So sure, you could, you know, do these last 2 things. However, they don't help if you don't claim things. You know, you can have real estate in a business, but if you don't claim, it doesn't help. So I think if you take all these things, at least that are relevant for now, or take the information for in the future, and you put them together, it will make a huge difference. I mean, just salary sacrificing alone has saved me so much money by you know, just knowing that. And once I realized that, I realised quite quickly, given I'm in this space, but a lot of people don't, which is why I'm making this video. And finally, guys, I'd just like to mention, if you are someone who isn't making enough for some of these to be useful, the other thing that you can do is look at things like the co-contribution from the government, and there's also one if you have a spouse, so I'll link them down below. I did speak about these in my 3 main ways to save money in Australia, which I'll link the video in the blog down below, but I'll also link the original links that are within the blog and the video, just in case you want to go straight to those, and they're very, very useful. So when I was on a lower income, initially straight away when I came out of school, I used these, and then I utilized other ones. So there's always a tax break for you, you know, if you're lower or higher. Obviously, again, if you're in business and you're making a lot of money, there's more tax breaks available to you, unfortunately. That's just the way that it kind of works. But there is something available to you. So the government is trying to help, and there are a lot of schemes for people on lower incomes, and I know that because I utilized them when I was in that situation. If you guys want to check them out, you know, click down below. If you have any questions about it, please do comment, you know, just ask me or message me on Facebook, Instagram, Pinterest. I'm on all those things, and I'm happy to answer. Love talking to you guys. So yeah, guys, that's pretty much it. Thank you so much for watching this video. This was Nick from Aussie Money Man, and I hope you guys enjoy it. Subscribe, like, check me out on Facebook, Instagram, anything like that. That's cool. Hit me up. Thanks for watching.